Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states and Puerto Rico. The question of the day is, do fixed annuities have fees? Do annuities have fees? Let's just ask the general question, because I hear a lot of people go, oh, I never bought a new son, they're just fee laden. They're laden with fees. Spell laden, please. I mean, I hear that and I'm like, oh, I'm getting dumber just listening to that. Seriously. Some do, some don't. But we're going to go over all of that. I'm going to explain it in a nice fashion. I just got out all the anger, just whew, cathartic right there after this. So, do fixed annuities have fees? Let's just go through them one at a time. What fixed annuities are the primary ones? Multi-year guarantee annuities, the annuity industry version of a CD. The answer is no, there are no fees. Fixed indexed annuities, another CD product, they do not have any fees unless you attach an income rider. If you attach an income rider, then there are fees for the life of the policy. Single premium immediate annuities, the granddaddy of all annuities, developed in the Roman times, a lifetime income product, no fees. Deferred income annuities, in essence, a single premium immediate annuity that you defer, no fees. Qualified longevity annuity contracts, QLACs, developed in 2014 by the Treasury Department and IRS for use in your traditional IRA type accounts, no fees, okay? So, of all of the main fixed annuity types, only one has a fee, and only if you attach a rider, typically an income rider for lifetime income benefit, to that product, and that product is a fixed index annuity. Let's dig in a little bit further though. Fees to you might mean commissions. All right, so we talked about product fees, commissions. All commissions with all annuity types, including fixed annuities, are built into the product. It's a net transaction to you. Just think of it like this. The easier to understand the product, if you can explain it to a 9-year-old, which you should be able to, never buy an annuity you can't explain to 9-year-olds, no offense to 9-year-olds, the commission is lower. The built-in commission is lower. The more complex the product, like an indexed annuity, the higher the commission. It's really that simple. So QLACs, DIAs, and SPIAs are kind of the same structure. Very simple pension products, no moving parts, no market attachments. They're non-correlated. They're just pension products. Easy to understand. I could explain it to a group of second graders, and they'd be like, yeah, I got it. I mean, low commissions on those. Multi-year guarantee annuities, CDs. They're a CD. They work like a CD. I also call them an annuity bond because you're getting a guaranteed interest rate for a specific period of time, and the specific annuity company is backing up that interest rate. Very simple. Nothing more complicated than that. Very low commissions. It's when you do the index annuities with the caps and the spreads and the participation rates, those commissions can be very high. Not saying they're bad products. We use them only for the delivery system of the income rider guarantee. We do not look at the accumulation value because MIGAs beat indexed annuities for accumulation, regardless of what anyone tells you. Now, a couple of products we do not sell. Used to sell them in the past in my days at Morgan Stanley, Dean Witter, Penny Weber, and UBS. Variable annuities we do not sell. We don't sell anything that doesn't have a contractual guarantee. Same thing goes for registered index-linked annuities, no contractual guarantee. All of that's hypothetical and theoretical. We do not do that. You own an annuity for what it will do, not what it might do. And we ask 2 questions to even see if you need an annuity. What do you want the money to contractually do? And when do you want those contractual guarantees to start? Then we use the acronym PIL, Principal Protection, Income for Life, Legacy, and Long-Term Care, to see if you need to contractually solve for one of those goals. I am the only person out here that says do not buy an annuity for growth or non-guaranteed returns, potential returns. I am correct. And the only reason no one follows me is they don't have the guts to say it. They also don't do the volume that I do on the fixed side. I've just burnt the boat. I burnt the boat on the truth and said, do not buy growth. If you want growth, buy the markets. Don't buy an annuity. I know everyone's trying to pitch you this annuity that can do protect the principal or buffer the principal or shield the principal. You get all these upside too. Come on now. Come on. Go buy the markets if you want real growth. If you want contractual guarantees, buy annuities. But when it comes to fees, okay, we've covered the fees of the products. And by the way, variable annuity fees, high. Average, last time I checked, was 3% annually for the life of the policy. You know, all of them combined, some are 2, some are 4. That's really high. And then RILAs, They have their own fees as well. We won't go into that, but there are fees within that. Now, let's go one more step with fees. This one's going to maybe pop the top of my cap off here. If any advisor is trying to charge you a fee to manage a fixed annuity, to me, that's financial malpractice. That's insane. I'm going to manage this contractual guarantee for you, sir. What are you managing, Fred? It's a contractual guarantee. It is what it is. I read the contract. It's going to do this because it's a contract, and you're going to charge me a fee? Duh. Come on. You're smarter than that. So if anyone's trying to charge you a wrap fee on an immediate annuity, QLAC, or deferred income annuity, that advisor is either stupid or a sociopath. If they're trying to charge you a fee on a MYGA, which is a CD product, look them in the eye and say, would you charge me a fee on CDs? And then if they charge, this is my favorite. There are people out there that charge an annual fee to manage an indexed annuity, a fixed index annuity, that only credits the gains 1 day per year. The other 364, you're an annuity eunuch. Look it up, okay? There's no justification. Bring the letters, bring them, industry. Stan at theannuityman.com. You know I'm right. You should never allow anyone to wrap fee an indexed annuity. That is insane. It's financial malpractice, in my opinion. Same thing with variable annuities. Variable annuities, someone should not be charging you a fee to manage it. There are no load variable annuities out there that you can manage yourself and circumvent the fee. As for RILAs, same thing. If you want growth, go buy growth. Don't buy annuities for growth, please. Yes, I'm the only one out here, and you got to say, wait a minute, why would Stan, top agent in the country, licensed in all 50 states, why would he be the only one saying that? It's not because I'm just this pure contrarian that has a mohawk. I don't have a mohawk. The point is, it's true. I still can't believe the sales pitches I hear about growth with annuities. Coming from Wall Street, where real growth happened, Morgan Stanley, UBS, all those people. Then I come over here to become Stan the Annuity Man, of course, here I am, and there's people out here going, market upside with no downside and an upfront bonus. And I'm thinking, it's a goof, like we're on candid camera. Remember that, you old people out there? Like, it's a joke. And it's not a joke. That's how they're selling these things. And I've yet to really find anyone very happy with the accumulation story. I'm sure there's 1 out of 1,000 somewhere. I know who is happy, the agent selling the dream. Understand this, when you buy the dream, you're going to own the contractual reality. So getting back to the original question, fees on fixed annuities? None, unless you attach a rider to an index annuity. And if you do that, you're probably talking to us because that's the only way that we use indexed annuities as a delivery system for the riders. The other fees, commissions. They're all built into the product. The more complex the product, the longer the surrender charge of the product, the higher the commissions. Just remember that. The more simple pro customer the product is, the lower the commissions. And then the last thing about fees, don't let anyone charge you a wrap fee to manage an annuity. That is highway robbery and, in my opinion, financial malpractice. And if there's a fiduciary out there saying that it's the right thing to do, they need to take the plaque off the wall. All right? One last thing. I did a video on how annuities can help your family. I know you're saying, what? No, not my family, your family. Okay? Your family. And I'm giving specific examples that I use with my daughters and my wife. Things that you could use with your grandchildren, other children, etc. It's worth a watch. It really is. Go to my site, theannuityman.com. You can download my owner's manuals for free. You can get me for free. You can book a call, free consultation, or you can email me, stan@theannuityman.com. Hey, thanks for joining me, doing one of these every single day until I keel over and die, which could happen. But until then, see you next time.